All right, good morning, everyone. Happy Wednesday. It is Hump Day, June 24th, 2026. Let's see what we get going for today in today's auction. All right, NFA compliance rule 2-29C subparagraph 1. You understand the risks of trading, and past performance is not necessarily indicative of future results, but we try to make them rhyme. We can use past results as a guide, and that's what you certainly want to do. Try to use it as a guide for future actions. All right. All right. Go equals M. Good morning, Nicholas. Past results is all what we have. Yes. Yes. We try to repeat those for sure. Try to repeat those best we can. All right. Staying on the side of the probabilities. Very good. All right, let's take a look at what we have going here. We have a cycle day 2, and you can see here during the overnight. Let's actually flip to this chart here on the left. All right, here we go. All right, so here's your cycle day 1 low right there. All right, cycle day 2 today. Overnight daily trade strategy did hit the 74.25s down here as one of the initial targets, and 74.65s. Okay, you get the link to the daily trade strategy update. You can take a look there. So we again both initial areas have been tagged. All right, potentially some further ones to the upside, to the downside, but during the overnight, those are the edges. And again, right around here, this prior close at the 45s. I also noted the 45s again as the, oh, actually, yesterday we had 75 45s. We're already down 100 handles there from yesterday, right? So 75 45s. I almost wrote 75 45s again today or last night for today. And then I had to, when I was proofreading what I wrote, um, I realized that I wrote 75 45 and I had to readjust everything. So 74 45 from yesterday for today. All right. So cycle day 2, the expectation uh, is, right. Again, I put up a graphic of kind of the cycle day 2 expectation, but basically MATD type rhythms, right? Market or morning after, kind of this trend day down, gap day up, excuse me, gap down and trend down. All right. So we're looking for some, a cycle day 2. Okay. You kind of think about that as more kind of shock absorbers, right? So you got this, move down, and then we get kind of this automatic reaction, right? Back up and then back down, and then another reaction back up, right? So the oscillations, right? And that's another way to look at it as well. When you get a dislocation in price, right, up or down, um, which can be fairly violent, then we have what we're looking for into the next session, okay, is some counter responses to that initial impulsive move, which was down in this case, right? So automatic reaction, kind of back down, retesting those lows, back and back and back and back, right? So we're looking for kind of these oscillations to subside. Now, at some point, we're either going to, move the continuation move down, right, from that impulsive move, all right, or this will continue to stabilize and it'll kind of work its way up. At some point, that will happen, right? So we just need to, so the expectation for today coming in would be that shock absorber effect and, dampening of oscillations, all right, so which we are getting. So at this point, we'll just kind of keep the edges in mind, all right, the 65-25s. Now there could be, a fair amount of back and forth today where we could have some nice tradable plays. Okay, but keep in mind that that move down was now again this again question mark, question mark, question mark, right? We're coming towards the end of the quarter. There's an end of quarter rebalance. Okay. Noted that yesterday. What was it? JP Morgan. Was it JP Morgan? Mentioned about like 165 billion potential. All right. Again, all this factors into, what's going on. It could be a non-event. It could already been, in most cases discounted, in terms of all that. We don't really know. We don't control the book. Okay. It'd be nice if we did control the book, but we don't control the book. Book meaning the institutional players and what their intentions are. I used to be in that world, but and we used to do, I used to participate in some of the rebalancings in the Nasdaq area, right? And it was pretty wild, at the time, and I'm sure it is today as well. But with the onset of the algorithms that are doing most of the work versus humans doing it, again, much more efficient, perhaps. All right, but that's just more backdrop for us. It's always good to keep that contextually in mind, right? But for the most part, we're going to do the same thing every day. Okay. Um, yeah, that's pretty much it. Anybody else have anything? What's on the calendar today? Calendar today. Today is Wednesday. Not much. Crude oil inventories. They're expecting a draw of about 8 or 9 million barrels. What else? New home sales, not a big deal. And we got GDP tomorrow, core PCE on deck for tomorrow. All right, so that's kind of from that angle. Anybody have anything? Questions, comments, considerations? As my flight instructor would always ask me. Questions, comments, considerations before we take off. Kind of go through your checklist. Make sure you have everything set up as what you need, what's working for you. I mentioned a trending indicator a while back. Okay, you'll have to give me a little bit more direction on that. Um, yeah, I mean we have moving averages and things like that. Staying in alignment with the with just the price structure itself. All those things are trending indicators. Are trending, showing how much the market is trending. I'll have to think about that, Barbara. Off the top of my head, it doesn't surface. Does anybody else give me a little hint? I'm sure it'll come to mind, but right off the top of my head, it doesn't seem to. Um, um, I mean, a couple of the tools that we use, would be like the 3-day central pivot zone. Okay, from a structural standpoint, where that can define trending conditions structurally. Um, you know, uh, Again, there's a number of different approaches, right? Of course, let's again. So if we go to the multi-time frame chart here, all right, on the left, of course, moving average is always going to kind of be in that category. Okay, so you can clearly see on the daily here, right? We have, obviously that's a trending condition, right? Following those moving averages. I mean, that's probably one of the primary trending conditions, anyways. Subsets to that would be, uh, our 3-day central pivot zone. Okay, again, like here, you know, 3-day central pivot zone. That kind of helps give us a directional influence. Okay. Um, Another kind of way to look at it as well is value areas. I know we're getting towards the opening here, but value areas, right? How are the value areas? So remember, value areas essentially 70% of all the volume on a daily basis, right? So how are the value areas? Um, are, are the value areas kind of higher highs and higher lows of value, not of the day's high lows, but of value? Are they higher highs and higher lows, or lower lows and lower highs? That can be another uh, indicator of directional influence. Okay, so I don't know if there's a single, one. I mean, the most common one are moving averages. I mean, that's the easiest, kind of simplest to understand. All right. Um, but there are clearly other factors that can that you can use to determine kind of a direction. Of course, our ATRs intraday are helpful. Okay, so there's a number of different things. Not sure which one rates the highest. Maybe the moving averages are the easiest. Um, so hopefully that helps a little bit. All right. All right. I mean, if there was something else that I mentioned, it doesn't come to mind at the moment. All right, market's just about to open. Dingity ding ding, ring the bell. Again, we're starting off in a more neutral location, right around the midpoint. Somewhat of a narrow value area, so we expect that to expand a little bit as the day unfolds. All right, that high-low value area, not the high-low range of the day, just the value. But we expect that to expand a bit, right? As the direction unfolds here. All right, so being a cycle day 2, I'm going to be um, outline our areas. So what do we have? 45s, I think 35s, 25s, 15s to the downside. And again, all these numbers that I post on the daily trade strategy, all these numbers come directly from prior sessions. So it's not like I'm pulling a rabbit out of the hat in any way. That they just all come from prior sessions. Okay, so oh, the directional movement. Oh, okay, right. Okay. Yeah, the DMI ratio. Thank you. All right, yeah. I didn't mention that one, but yes, directional movement indicator. Okay. So that is a very good one as well. No question about that. Um, yes, I like that quite a bit. The DMI. Okay, and again, you can use that on multiple time frames. Okay, here you go. All right, there's the link to the DMI. I found it where I wrote it down. Okay, good. Yeah. So anytime you have questions, that's a good thing. Anytime you have questions or anything, just jot it down like Barbara did, because I do that. I have a notepad, scratch pad of so many different things. Yeah, check that out. I that's again, yeah, watch the video. It's a good one. That'll tell you pretty much all about it. It was created by Wells Wilder. It was the original. The original one is still out there. All right. It's called ADX DMI, Average Index, Directional Movement Index, or something like that. It's called. So the ADX DMI. Um, Interestingly enough, a little backstory to that. Um, so a little backstory to that while we're waiting for a trade here is there was a book written by a gentleman by the name of Charles Schaap. Okay, here's his name up there, Charles Schaap. He's actually a very good friend of mine, and his uh, wife, Christine. You may have heard that name before. Her nickname was Candy, and she was one of my primary mentors years back. And he wrote a book uh, referred to as AD Excellence. AD Excellence. Okay. All right. Look at this link. Okay. AD Excellence. It's currently out of print. All right, but I have a signed copy of it. Anyways, his wife. Let me see if I can get a closer picture. There's an image of Charles and his wife Candy, or Christine, and she out my first video pivots. Yeah, there you go, Ram. Ram's mentioning it here, posting it up. My first video pivots, DNA of market structure. Okay. Um, Candy, Christine, uh, was my primary mentor many, many, many years back. Okay, and she was a hedge fund manager, and she taught me mucho. Okay, not market making. All right, she didn't teach me market making. She taught me how to be. She actually taught me how to transition. All right, away from being a market maker's mentality and what market makers use and do, to more of a hedge fund style, independent kind of trader. So she's a great influence on what you're experiencing here. And her husband wrote that book, AD Excellence. So um, it's when I was learning that, I always knew about the ADX DMI, but I didn't never used it. So he actually taught me kind of the inside baseball of using DMI ratio or DMI, ADX DMI. And I saw him, watched him, uh, not so much, well, yeah, in futures. He traded futures as well, but he also trades a lot of individual stocks, like they ran portfolios, right? They managed quite a bit of money. And one of his primary tools was the ADX DMI. Um, you watch it long enough, the master at work, when it comes to that one, you become a believer because I could see exactly a lot of the things that he was implementing that he writes about in his book. His book is very practical. All right, so if it's something that you're interested in, I don't know if it's in print anymore. Maybe you have to get it on eBay or wherever. But um, so there you go. A little bit of a backstory about the DMI, and so what we did here on the ADX DMI, I didn't care for the structure of how it looks, the interpret, like the how to interpret. It's a little funky the way to interpret it. So I reversed everything and I created the DMI ratio, which is a little bit more intuitive, visually and so forth. So there you go. That's how the DMI ratio came about, but can be used on all time periods. So very, very, very good. Thanks, Barbara, for pointing that out. Kind of created the little backstory of mine. Yeah, she's greatly missed. I keep in touch with Charles. I don't talk to him uh, that often. Maybe a couple times a year, something like that. She's actually originally from Connecticut. Hmm. All right, so Steina's kind of hanging out in the middle here. Again, the expectation is more of a two-way street. So we went up and probed, right, 65s, and then again rotating back down. So don't really have a clean setup here. So going to be a little bit patient for something a little bit more directional. If for those of you that do like, range trading, which I think many of you had mentioned in the past that you do, this is the type of day for you. Okay, where you're looking at the upper and lower edges, right? Again, this is where, looking at so looking at CCI now, using it in a range. Okay, so typically I created this, the way we use premiums and discounts, the primary it was for directional moves, right? So when we're in a trending up, trending down, we're looking for those pullbacks, right? To create premiums, discounts in a directional move, right? So that was the primary development of those, and they work very well. But on the flip side, premiums and discounts work very well in non-trending conditions, right? So that's why I've always referred to the CCI crossover system or CCI indicator as my all-terrain vehicle, all right, that I can utilize in all conditions. Right now, what you have to do though is you have to adjust. You got to modify your thought process a little bit because it is non-trending conditions. So, right, if it's a non-trending condition, then I just have to apply. The concepts are the same in terms of what a premium and a discount is. That doesn't change. It's just how I utilize it, right, in a trend or a non-trend condition. So that's something that, we have to be able to identify for ourselves, right? And that's really the primary, oscillator that I've always used for years. I mean, there are many, the MACD and others. We use MACD on the 3 minute, but um, that's the primary one I've always been using, and even more so than stochastic and RSI, which are also very good. Oh, I see what I did. I see what I did. Here we go. All right, coming down to the A10. Now the A10, I believe already got tagged overnight. Yep. So this would be the first touch of the A10 RTH session. So if you are an A10 trader for an RTH, this is your first touch RTH, but it is not the first touch of the A10 zone that occurred overnight. So up to you how you want to handle that. In this type of rhythm, you know, I, we'll see. It's still a valid area. And it is also associated with a high volume. This is the point of control, by the way, or the line in the sand for today, right? 74.45. All right, so this will work. I mean, should work or anticipated to work. All right, there you go. All right, so now you're getting some. So if you entered long on that pullback, all right, you're scaling out. John, you're gonna need to reach out to Marlon. I honestly I can't help you at this point on my side. All right, so if you grab the any part of that A10, you're in great shape. All right, that really corresponded to the high volume node over here. So depending on how you play that. And again, if you're pure to the first touch of the A10 or ATR4 for that matter, any of the ATRs, if you're pure to the first touch, regardless of whether it's the RTH session or Globex session, right, overnight, again, this touch here, just keep one thing in mind, this touch here was not, it's not the first touch. It is the first touch RTH. So just a designation. Okay. Um, which one works better? Again, um, kind of that would, I would encourage you to do some research on that if that's a question of yours. But it still is the first touch of the session. Now keep one thing in mind, the market doesn't know whether it's the session or not. I mean, any of our signals, what I mean by that is the signals don't know whether it's the, oh, this is RTH session. Maybe I shouldn't trade it, or maybe I should trade it. It doesn't work like that, you know. It doesn't work like that. You need to just simply ask the question and then do the research on, you know. And you could do a spot research. You could just do a spot where, I mean, look for sessions where the A10, the actual first touch, and you'll know the first touch because it'll have an arrow. You'll see the arrow. That's technically the first touch, okay? Regardless of the session. So you just simply ask that question, you know, where are the actual first touches? And then you kind of narrow it down and say, where are the touches where it happened overnight? And then you got to drill it down a little bit further and say, well, what about the first touch of RTH session if it had already gotten tagged during overnight? That's kind of the question you would seek, right? That you would ask. And then you look for, it's not that difficult. And then you just find those instances, write them down on a spreadsheet, mark them off days, you know, which days they were, et cetera, et cetera. And then after a little exploration, you'll start getting, you know, some results. If it worked, how far did it work? What was the maximum favorable move? What was the maximum adverse move? It's the only way you're going to really be able to build out, you know, levels of confidence and so forth. Again, that's even if you want to explore that particular question. So just final question here. Raise everybody, if you can, raise hands. Does everybody understand the research aspect of it? Right? Researching a question, right? Forming any question you want, but the actual steps that go involved with it, okay? Kind of the idea, like, okay, let me formulate a question, let me begin to research it. How do I research it? You know, look for those instances, repeatable, et cetera, maximum favorable excursions, adverse excursions. Everybody kind of understands, all right, that. If you would raise all your hands, whoever's listening. Okay, thank you, John. John B says, I finished that for the A7 when it is inside the 89,233 envelope. There you go. So there's something that all right. So John B says here, so I want to research. So this comes up with an idea. I want to research, right? Correct me if I'm wrong, John. Um, I want to research what's the performance of, I'm assuming the first touch of the ATR7 when it's inside the 89,233 envelope. Would that be the fair question? Okay, great. That's the fair question, right? So see how you formulate an idea, but you don't know what the results of that are going to be, right? So you formulate an idea, set up the scenario, and then go back and look and a lot of times this is manual. I suppose you can use AI today and do a lot of that stuff, right? Set that up, and that could be very helpful. Um, but I'm still old school when it comes to that. I'd rather I'd rather do it manually because you can get a sense of what's actually happening when you see those occurrences versus having AI or wherever spit out, you know, numerical answers, responses. You just don't get the same kind of, you know, results, right? John says his wife helped him. There you go. A lot to do the manual work. Takes a lot of time. Yes. And that's another thing. Takes a lot of time with a lot of this stuff. I mean, all the stuff that I've developed, I mean, and coded and whatnot. I mean, this takes a huge amount of time. Forget about the expense. I mean, we can go there too, but expense aside, I mean, the amount of time that it takes is just enormous, right? But, you know, if you uncover something, think about it. If you uncover something that becomes so valuable to you, was it worth the time? Now, there could be a lot of stuff you research and it's just flunkadunk, doesn't go anywhere, right? I mean, think of all the best inventors out there that we come to expect today, in our daily lives. All those things had to have been invented, right? Lots of failures along that road to success. So same thing here, you know, don't expect, instant perfect results. You have a hypothesis and you see, what the actual data shows. John says some very interesting results with the MAE and MFE, maximum favorable adverse excursions. Yeah, that's always my go-to initial metric. Just with that metric alone, you will find out quite a bit about the efficacy. Word of the day, Steve Nine, you here? Efficacy. He loves that word. uh, you'll find out a lot about you know uh, the results, which could then again more likely lead you to the next part of the research, right? And measuring the MFE MAE is not P&L. I mean, I could show you some results that I have from the research that I'm ongoing here that I do, right, about MAE and MFE. And I mean, so let me just give you a show of that for a moment, right? Uh, let's see. Ba-da-ba-bum-bum. Okay, so what do I mean by what I was saying about it's not P&L, right? So if you take a look at this screenshot, let me know if you see it. Everybody see that screenshot? Okay, you do see it? Okay, great, thanks. Just want to make sure. So in this is one of my tools that I built. My programmer coded it, but we built it, all right? So what's important to see here, okay, in this run, is that we got 301 current signals right now on a specific setup, which is a decent sample size, right? I like to get over 500, but 300 is very good. I mean, it's going to give you some interesting, direction, right? So the way I'm looking at it is my initial score, right, of MFE, MAE, primary metric, no matter what I'm researching. This is where I begin, all right? A score of 1.93. So anything above 1 has a positive expectancy. This one has a 1.93, so nearly 2, right? The maximum favorable average, excursion average, 30, basically 35 and 3/4 points, okay? And then the adverse is 18 and a half. Now that doesn't tell us, and forget about the cumulative P&L and win rate because that's not really calculated correctly here. Right, but what's in this segment here, I'm just looking for what's the MAE and what's the MFE, and what would be the score to that, right? So basically almost 2 to 1, right? It doesn't tell us the streaks. So the next section there, all right, if I want to know, well, of the maximum favorables and adverses, well, how many favorables in a row? How many adverses in a row? That could be very important to you. It should be very important to you. So that would be kind of another, like, okay, we got a good favorable, essentially almost 2 to 1 favorable versus adverse. On the surface, that looks terrific, right? But that's not the whole story. That's not the whole, right? That's just one metric of it. And I think what a lot of people do out there is, I'll throw out, oh yeah, this particular one has an MFE, to AE ratio roughly 2 to 1. Okay, I'm going to trade that. That's what a lot of people will do out there. Oh, okay. Okay. You got almost a 2 to 1 ratio. Good. I'm going to trade it. Not knowing anything more beyond that. One simple data point. That is absolutely wrong to do. But so many people out there will do that. Why? Because they don't want to do the work. They want to say, oh, hey, he did the work. He knows what he's doing. He's been around for many years. Doesn't work that way. All right. It's just a point to say, okay, now I can go do there is some efficacy there, but what's the distribution of that efficacy? What's the distribution of favorable to adverse? Just like a volume profile, what's the distribution of that? That's where you start looking deeper. What's the streak? How many favorables in a row versus how many adverses in a row? Okay, and what's the kind of the frequencies of those? You could find that even though it has a 2 to 1 ratio favorable, you could find that you're not going to be able to survive the adverse streaks before that favorable 2 to 1 ratio, right, finds itself. And that's over 300 trades. So again, there's a lot more involved in a lot of this stuff than meets the eye. Okay. And so that's just something that, you may want to, when you're doing all this research, that's why it's just not a single point result. But many out there are just taking those single point results or taking somebody's word for it. And I always say to everybody here, you've heard me say this over the years, take my word for it. I mean, don't take my word for it. Listen to me, right? But do the research on your own. You will actually learn quite a bit if you start doing that. and things will perhaps become a little bit clearer in terms of, how you approach, various setups and so forth, instead of just running around grabbing every setup or every potential setup. Well, you need to have some, like, look below and look above and fails, right? The peekaboo style trade. Start off with the daily one, and then there's the dynamic ones, you know. I mean, a few winners, can get you all, excited about it, but also, a few losers in a row will do the opposite, right? So you just got to have to take that methodical approach to all of this. Right, to doing any of this stuff. So this is stuff that we've, again, we've talked about over the months and years. Um, and I do agree, as John mentions, that it just takes an enormous amount of work. He even recruited his wife. John, I don't even want to ask you what you have to, what the payment is for that. Oh, she trades as well. Okay, good. So she knows what I'm talking about, he says. Okay, cool. All right, so just kind of hanging out. Again, the rhythms here are conforming to what we expect for cycle day two. Intraday trading, but a different style. Okay, cool. All right, so responding right around this VWAP. So, and again, this is the idea about trying to frame out what the expectation is for a particular cycle day. Most cycle day twos respond to what we're kind of seeing here. More rotational, two-sided trade, balancing, consolidation, all those type of terms that you want to use. There are other times where on cycle day two, we'll get a continuation of the cycle day one move. So if the cycle day one was, a downer. Okay. Lots of times, there are not, maybe I forget what percentage would be, but there would be times where you'll get follow through, or I refer to as spillover into the cycle day two session, where it kind of looks more like a trend continuation type day, and that can happen on a cycle day two. Most cycle day twos, though, generally are what we see here, kind of this two-sided rotational. So when I quote or reference what the expectation is for a particular cycle day, keep in mind, all right, I'm really quoting and referencing the highest or the most likely historical, reaction or action for that particular day. But also noting that on any one of those days, it can be an aberrant day to what the norm is. Just have something in mind right, a backing and filling type day, as Barbara says here, right? So, you know, is the normal expectation. Is it conforming? Not will it conform, but is it conforming to that expectation? And if it is, then you can begin to formulate, well, how do I want to trade in that, rhythm, right? That groove, that vibe, right? How do I want to trade in that? Do I have a plan set up to trade in that type of an environment? Or am I more, simply a directional type, style? You don't have to be both. It's good to have a little bit in both. All right, so you can give you some flexibility, but you don't need to be, you don't need to be, a crack range trader or, that type of thing. I mean, just, play to your strengths and then work on the other areas that you want to improve, you know. Oh, thank you, John. This is how we visualize the data in a distribution profile. There you go. Yeah, perfect. Yeah, what you'll find in many cases, it's an asymmetrical profile. Okay, you're not really going to get, a good clean, D-shaped profile. It's either going to be a B-shaped. Most cases, it's going to be a B-shaped, right? For the most part. Um, nice. Thanks, John, for sharing. All right, very nice. And again, once you have kind of data like that, then the question is, well, what does it all mean? Well, what were you trying to uncover, right? Go back to your original question, your original premise. Yeah, John, I'm going to just going to take a quick snapshot of that, just to put, I'm just going to put it up for the recording today. So those watching the recap recording, they'll be able to see what we're talking about here. So this is a profile or output that more looks like a distribution profile that one of our members, John B. here, has been working on one of his projects. Maximum adverse excursions, etc. Right, favorable excursions. So this is an example of one of the outputs that he's sharing with our community. Okay, so again, thank you for that, John. So that just gives everybody in the recording a little quick visual on what we're talking about. But the idea is once you have some results like that, then you're able to, maybe take it to the next stage. Maybe you find out there's nothing, really to it. But then you could also say, well, there is something, a bit to it. You may want to change a variable in there, you know. It's always a starting point, and then add a variable. And then when you start adding variables to anything that you research, you got to do one at a time, and you got to research that. If it takes you 3 weeks to monitor it in real time or however way you're doing it, you can only do one at a time. Because anytime you add a variable, you should only add one variable at a time and test it. Don't like, oh, can I add this, this, and this? Because then you won't know how that variable is affecting what you've already done. That's why it's such an arduously long process. And to me anyways, my viewpoint is this, this new AI stuff that they jibber jabber about and all that. Yes, is there some cool things that can be done with it? Sure. All right. But nothing really replaces the hard work and time and effort that goes into, what we're discussing. One variable at a time. How does that affect what we've already done? Right? Is it beneficial? Is it not? If I take that out and replace it with a different variable, again, the process starts all over again. Now you can see how long and arduous it becomes, and I've done this for, better part of 10 to 15 years doing all what we're doing here. And is it perfect? Do we have a perfect, system? Nothing is. All right. Okay. All right. So, kind of just things to kind of keep in mind as you're navigating, with your own businesses here, trading businesses, and it should be, trading business, right, for everybody. Um, so kind of navigating through the maze. And what we do here on a daily basis is just, again, this is just one aspect of, the whole trading game, you know. Most of the work, I will say, truly happens offline, right? The trading session itself should be just simply, you know, uh, with all honesty, there's a lot of sitting and waiting, waiting for, the market to develop, to a particular structural pattern, uh, generating the momentum behind those patterns that it's gonna, propel price and potentially your trade, right, to where we want that to go. All right, super. Anybody have anything else they want to discuss? Again, we're right here in the middle. There's not much to do at the moment. Again, just kind of still monitoring the action. But if anybody has anything, this is the kind of the time when we get the slow periods, um, to talk about some of the stuff. So let me know if you do. All right, thanks, Nicholas. I did get your email. Let me carve out a little bit of time for you. I'll let you know. Thank you. I'll read your report as well. Super. Yep. Well, I have to get another computer. All right. My backup computer here finally uh, met the big silicon uh, maker in the sky, so to speak. It was a Windows 7 backup computer. Everybody's using Windows 11, right? So it was a Windows 7, so it was, certainly I'm not surprised. All right. That lasted a while, and certainly it did. It lasted 12 years. 12 years. So I have no complaints. So I ordered another computer from Digital Tigers. If you ever want a computer, again, if you're ever in search for a computer, right? Again, I use Digital Tigers. Okay, here's the link. All right. If you're ever in search for, good, I mean, there's a bunch of places you can get trading computers from, but this is the one that I use. So this system, the next system that I'm buying right now, okay, it will handle 8 monitors. I have 7, so so it will handle 8 monitors, and it's just going to be blazingly fast and whatever, you know. But yeah, so that's probably going to take about, well, I'm going to enter the order actually in today. I got all the specs and stuff yesterday. Um, Once I get all that in and those begin on it, probably take about 7 to 10 days and probably another couple days for delivery. So a couple weeks. Good thing about it is I don't really have to change anything of what I'm currently using right now. So it's gonna act more as a, it's interesting because Jeff, who owns the company, uh, who I spoke to yesterday, this is gonna be my fourth computer system from them, by the way. So, and they have some big, very big company customers. If you go on their website there, you'll see all the various customers that they have, big corporations, but they treat me literally like a big corporation. I mean, the amount of attention and service, and yes, Barbara says great tech support. All right, they are stateside here. They're in Georgia. All right, there's no overseas, you know, stuff. Everything here is stateside. And compared to maybe another system out there that you can get from another vendor, maybe I'm paying a little bit higher. All right, but I don't know if I actually am. I think they're very competitive to begin with. But even if I'm paying a couple percentage points higher, let's just say, I don't really think I am, but the tech support, all right, yeah, the prices look okay to you. I think they're fair prices, overall, depending on how, what you choose to, it's all customizable, all right, to what to what you want. So there's not one core. I mean, there's a core price point, but it all depends, how you want. What your needs are, what it all comes down to, right? What are your needs? And so, So I tend not to skimp. I'm not a skimper. Okay. All right. But their tech support, I mean, when I call them up, I mean, they know me, and I'm a single guy here, right? But I've been with them for like 20 years now. Four different computer systems I bought. I just bought one for my wife. It's not really a system. Yeah, it's a system. It's a computer, but for her because she needed something. The what she was using, died as well. But they actually created. She likes all these all-in-one computers, right? So the screen and everything else is just it's like a laptop, on a stand. And so they actually built it for me. I don't think they were advertising on their site an all-in-one, but they built it for me. Said, okay, yeah, we can build that for you, even though they don't advertise that, right? And and her computer is not as robust as mine because she doesn't need it for that. So we built something that was adequate for her, more than what she actually ever would probably need. And all that's what we also need is for her with her. She does a lot of paralegal work, illegal work and stuff. All right, so she needs to have. She's a contract paralegal. All right, so she works for various attorneys. She doesn't work for one attorney. She works for various attorneys. As a contract paralegal, and so she does a lot of stuff from home. And so all what she needs, literally speaking, is like Microsoft Office, right? Spreadsheets and documents, and then backups. So anything that she does, she has to back it up. So I'm always helping her back things up, right? She has her own Dropbox, account. So everything's two things. They're backed up on the hard drive or the solid state drive. All right, that we have she has two drives, so one's a backup. We also have an external drive locally, so she backs that up there. And then we also have a cloud, right, the Dropbox backup. How many backups do you need? Well, when it's mission critical, right, you better have some backups when it's mission critical. So, so yeah, so if you're ever in need of a computer, again, I get nothing from it. They don't give me a VIG. I've sent a lot of our folks here to them. Um, I just think they're very, very high quality, and they have educational. They do business worldwide in various countries. I mean, but when you call them, I call them. Guess who answered? Jeff. The second ring. And I said, "Hey, Jeff, David Dubay over at Polaris Trading Group. Hey, David, how you doing? How you been? How's your trading going?" It's like, you know, it's like, personalized service. So these are things that I like. I'm old school when it comes to that, you know, and that's how I hopefully am with you guys. I try to be anyways, I try to do my best. Hey, let me ask you a general question regarding trading and stuff, right? Because I was talking to somebody else about this yesterday. How many of you really like, you'll see our trades on the screen, okay? And whether the trade wins, loses, whatever, okay? How many of you really remember any of that in the scheme of things? Like being a part of the community here, is that a primary something to think about? like that you're tracking. Oh, he made money this day. Oh, he didn't make money that day, and so forth and so on. I mean, I'm just curious because um, big effing deal for me. It is a big effing, or it's not. It's not a big deal, right? Yeah, big effing deal, right? Or is it or isn't it? Let me expand upon that, Steve. Okay. I like it that we are showing P&Ls and so forth. It's real type of thing, right? It's live. Yeah, okay. All right. But what I mean is okay, that's all good because that's all the way we've been doing it here. But what I'm kind of getting at, I guess my question is, maybe I'm phrasing it wrong, is um, that's all important to that we are displaying everything in real time and truthful and transparent. It's always the way it's been. But like, does it matter whether I made $3,000 this week or I lost $3,000 this week? I mean, in the scheme of things, no, right? Okay, good. That's kind of what the conversation I was having with somebody, right? Because over my years, my experience has been you're not going to necessarily remember whether whoever it is that's moderating or whatever channel you're on or room you're in, yeah, you want to see that they have something that works, right? But you're not going to really necessarily remember, the scorecard every day, week, and so forth because you're just not going. You just I don't think you going. People are going to. People that stay is like, okay, do they have something that works? Yes, but is it going to work all the time? No. Um, are they transparent? Are they honest with what they're saying, doing, showing? Things like that, right? Are they knowledgeable about the market and so forth, et cetera, along those lines, right? What's the vibe of the room, right? What's the vibe of the community? Are you looking for some of these people out on the screw tube and you know who they are, right? They're just entertaining, jibber jabbering, or are you looking for somebody that wants to really, you want to just be part of a community where it's not just a bunch of jibber jabbers, right? You want to have, yeah, you want to have kind of a positive flowing room environment. You don't want a negative environment. That's certainly not true, right? But I think a lot of the what people come away with is I like the vibe of the room, the community, the interaction. Yes, trading is hard. Not only that, I'm learning something, on a daily basis or weekly basis. I took something away from, that could be helpful to me in my own trading, right? Those are the things that I think the qualifying factors, I think, of being in a community and, whether it's me or someplace else, wherever it is, you're going to remember those type of things more than uh, than whether or not, oh yeah, okay, he made 3,000 today, or oh look at this, he lost 7,000 this week, or whatever. It's like, okay, in the very, very short term, yeah, it could stand out. But in the scheme of things, you know, it's kind of an irrelevant factor, you know. It's kind of an irrelevant factor. But yes, we want to be, because I think most everybody in here are not necessarily interested in shadow trading. Anybody, myself or anybody else or whatever, it's not really interested in shadow trading. You're interested in kind of like, okay, how can I do this? What were some of the things that I need to look at, And of course, you got to put all those things into practice as you're learning them. All right. So I just having a conversation with somebody the other day, and kind of his viewpoint was people really want to see, what you're doing and and whether you're making money, whoever the moderator is, that is. All right. Whether, they're consistent making money. Because, well, if he's consistent making money, then I could be consistent making money. That's not true. Somebody can very consistent making money on for themselves, but just because you shadow somebody, you know, not necessarily going to be the case, right? You could be correlated in your in performances and stuff, but you know, those are the people that don't want to do the work on any part of the work on their own. So we're just having a conversation about it. I was just kind of curious what you guys thought. You know, John B says, I don't even pay attention to what trades get executed. I listen mostly and watch to you explaining something. Yeah, thank you. Yeah. Yeah, that's kind of where I'm getting at. It's like, I don't know if anybody, yeah, we want to put on good trades, you know, but hey, if we have you know, a losing trade, so be it. You know, I mean, that's the way it is, right? You can always go back and say, well, maybe I shouldn't have done that, you know, or maybe you shouldn't have done this. And again, when you're always, if you're always second guessing yourself, that's not good either, you know. So it's all about trying to, you know, we're trying to slay the dragon the best way we can. But the idea is, you know, the honest, open, you know, approach. That's always the way I've been, and and that's why I mean, that's why I love this community. I love you guys with it, you know, being with it. And but we're, you know, again, we're a relatively small community because everybody wants to still, you know, look for that best mousetrap, you know. And if somebody, you know, is working at a prop firm or whatever, they're using the prop accounts. We use all the prop account. Most of us here, majority of most everybody is using some prop accounts, some varying degrees of prop and live. Um, you know, I've never been a one to pound my chest, you know, like some of these people out there. It's great. So, you know, guy made 300,000. That's terrific. Good for him, right? You know, I know how much work that is, and I appreciate that. You know, that somebody is doing well. It's funny though, nobody shows you how much they're losing though. Not readily anyways. But so it was just kind of a conversation I was having, that's all. There's no right or wrong. It was just kind of more kind of a discussion about it. That's all. All right, so we're still within the context of our range activity. Nothing really has changed here a little bit. Um, you know, within the context of ranges like this, though, like what you noticed here right now, we don't really have any core premiums and discounts, do we? Right, in this area, we don't see any real core premiums and discounts. For that matter, we only got kind of so far one little touch of ATR over here, right? We don't have a touch here of this ATR. We do have stackers, right? We do have stackers, right? Bull stacker here, a bear stacker here, and a bull stacker here, all right? So stackers in a range can also, you know, be very helpful, right? And so the idea is, you know, kind of just shifting with it. So when we get a shift, right, we got our ATR shift, we got our EMA shift, we got a stackers, right? Bull stacker here. Okay. Remember, I don't have the labels here, but you can put if you really want, I think it's this one. Yeah. So if you really want to put your labels on here, uh, if that helps you. Okay, there it is, right? So if this helps you, there's a bull stacker, right? So in a situation like you know, this type of day or any type of day for that matter, it's not just this, but if you know, kind of the idea of staying in alignment is simply, you know, you're starting to seeing, you know, momentum and shifting happening, ATR shifts, right? EMAs are beginning to shift, okay? And so first thing that tends to come to mind, I guess, with a lot of folks, because the way we've always kind of viewed it here for many years, is okay, we get a shift and we want to get a pullback, right, for an entry. I would say generally that's the overall arching thought process, right? And there's nothing necessarily wrong with that at all, right? But on the flip side, kind of as an alternative, where the idea is, okay, we're getting a pre bull stacker, we get a bull stacker here, we got our signal, right? Then maybe just kind of look to start a position there, just probe it. Yeah, if it pulls back, right, then you have an opportunity to add on a pullback. What happens if it doesn't pull back, but you're looking for that pullback to get on board? That's kind of where, the conundrum is, right? Yeah, the conundrum is you miss out, right? You miss out. So you get the bull stacker here. So you say, okay, I bought one here, or I could have bought one here. So at this price, whatever was that, 55, 56? Okay. But the pullback never really came, and now it's at 66. 10 points, 8 points, 10 points, whatever, right? Just use that example, right? 10 points higher. But you could have bought them there pretty easily, right? So once we got the bull stack, you say, okay, I'm going to buy one. You know what tends to be the fear or the I don't want, let's not use the word fear anymore, right? Let's use the word apprehension. I think that's a better term, right? So what's the apprehension here from buying one here, that it pulls back? Now you just bought one at a higher price. Now it's pulling back on you, right? Now you think, oh shit, I'm wrong. Are you? Right? So again, a lot of this stuff is how we think of things, how we classify things, how we categorize. And by the way, if anybody's really interested, okay, and I think you should be, all right, Danny, Danielle, Danny, Danny is going to be in the pit room at noontime today. Okay, her slot is on Wednesdays. She's put together some very, very interesting work, all right, regarding trader mindset. So I would encourage you to tune in to the pit room at noontime, and she has some potential announcements she'll be making going, about what she's going to be doing going forward. Right. So I think this, again, a lot of this mindset development stuff is really critical. All right. In the way we think of things, and, and how you've heard me talk about phrasing and all that stuff. Well, she's taking it to multiple levels beyond that. So there's something you may want to tune in. But essentially, the idea is, you know, um, when we get stackers, I mean, that is telling us something, that the market is trying to push in directionally, right? So, again, this is going to be another kind of area to, well, maybe I should do a little bit more research on it. Stackers, okay? So something that you can kind of, begin to look into a little bit further. But the idea is, the fear or the apprehension is you buy one here and then it goes against you right away. Okay, trade's not done. The opportunity is still, there. So now you buy a pullback, right? So I have no problem adding at a lower price on a standard pullback if I purchased one a little bit higher on a stacker signal, right? Again, it all depends how you want to, approach it. There's no right or wrong, just ways of approaching, as the market's unfolding in various ways. All right. There's not going to be a singular way to do all this. It's just you got to kind of work on stuff, like, well, what's the how? What's the what's, right? How would I approach it? You know, uh, what would I do in this, kind of environment and situation? Things like that. Ask those type of questions. And by the way, Danny, her work is going to be focused a lot in that area, you know. So again, definitely, tune in during the noontime. If you can't tune in, there will be recordings to it. All right, and we'll offer those recordings to everybody as well. But she's going to be this. She's going to be. Well, I'll let her make whatever announcements she wants to make going forward. There's a lot of good stuff that she does. Um, all right, but in any event, all right, so kind of using stackers. The idea is just to be in alignment. All right, don't be as, and I'm guilty of this quite a quite a bit over the years. Right, I've gotten much more lax at being it. I'm a perfect. How many of you are a perfectionist in here? You get a perfectionist attitude, right? I tend to be. All right. Um, it has served me wonderfully, okay, in my aviation career. All right. I would think you'd want your pilot up front to be as perfectionist qualities as possible. Okay. Um, so that's how I am, but that's generally how I am in most everything, that I do. Okay. Try to be, as best as I can, as accurate as I can, and so forth. But in trading, sometimes that can be kind of an obstacle. You're waiting for the perfect pullback. You're waiting for this, and you know what you're looking for. You're waiting for the perfect situation, and a good situation has passed you by. The perfect situation didn't. I mean, it's never developed. Good one, but you didn't take it because you're waiting for the perfect one. That's kind of the idea when we're in trading, like we are. It's like, again, it's, yes, so what I've replaced perfection in my own mind, I've replaced the idea of being perfect or perfectionist to strive for excellence. Now, excellence is different than perfectionist. So I strive for perfection. I'm sorry, I strive for excellence, all right, in what I do and how I approach things. So a little bit different, but could be meaningful. Could be meaningful to you if you're, struggling in that area that, you're waiting for that just perfect opportunity. It's just not going to happen. I mean, most cases as you want it to. So, all right, there's our how come that didn't execute? Oh, I know why that one didn't. Okay. Triggered on my other screen here. Didn't trigger there. All right, so there's your that's another again, we were talking about the bull stacker here, but there was your discount opportunity. Okay, a pull back into the A4 and EMAs. All right, so a nice pinching effect there. All right, that was also a 200 extreme, by the way. Ram is going to ask me that, I'm sure. Was that a 200 extreme? Was that your next question, Ram? Was that a 200 XT? I know what you're going to ask. So I preempted it. Yes, that was a 200 XT. That's okay. All right, so obviously we had consolidation. Now we're just getting our push above recent highs. All right, so again, at some point they're going to push above or push below as we outlined in our briefing. It's just a matter of when that happens, but it's going to happen. It's just a matter of when it was going to, which we don't know, but we can see it developing. All right, we got to move up and then a hold. Remember, in a case like this, right? So we had, what did we have? Let's a quick thing here, right? We had oscillations, range oscillations, right? Range down, range up, range down, right? Move up, shallow pullback, hold. It looks like the range of the bar was a little bit wider than I have to investigate. No, actually, no. I know why. It's well, I think the range of that bar is a little bit wide, but it's also it didn't have the full blue background. It just had the green background, which is bullish, but it's not strong bull. Remember the discounts and premiums that we have set for the Auto X, they have to have one of the key components of those is directional momentum. All right. So even though this is a discount, all right, this is a deeper discount. Oh, it's not a turbo besides. So there's your answer. So this is a standard. Okay, this is a standard discount, not a turbo. All right, that's your answer, John, by the way. All right, it's a standard discount, not a turbo. And the Auto X is not going to fire on the standard ones. It's only firing on the turbos. Okay, and of course we had a 200 extreme. So this is one it's a manual discount. You'd have to take that manually. That would not Auto X. Okay, does that answer you, John? John? Okay, good. Yeah. All right. So when you have on Sierra chart, when you have the fat arrow, the big arrow versus the small ones, that's a standard configuration, and they're they're very good, but you need to do those manually. That is an absolutely ideal setup. I'm sorry if I guess I was talking, so I guess distracting everybody there if you missed it. Um, so John asks, what does it mean when the turbo line, which is our yellow line here on the CCI, goes below the 200? It's just another 200 extreme. Okay. All right. So what pushes it into standard? Okay, great. So that's a great question. So when we take a look at the oscillator itself, well, let's isolate it. Let's isolate the oscillator. All right, let's move this up a little bit. All right, so just kind of zooming in here a little bit on the oscillator, okay? So we have an upside directional move, all right? And then we have CCI now. So the turbo line, which is the yellow line, is obviously much more sensitive. It's just going to whipsaw back and forth. And again, it does create some very good signals, okay? What generates, and that's what we call it the turbo, right? So you can see here the little turbo CCI. What generates the standard one, though, which generates the large white fat arrow, is the histogram. Okay, it comes below the 200 extreme. Okay, so that's what generates the fat white arrow. Okay, and so that's we call it a standard. and of course that won't trigger on the Auto X. But the turbo is going to, the turbo tends to go below and above the 200 quite often. You'll see over here it went below, it dipped below over here, it dipped, it went above there. Okay, so the 200 can kind of go above and below the 200 line, um, the 200 extreme line readily. That's not what creates the 200 extreme signal, right? What generates the 200 extreme signal is when the histogram. Okay, so so what do the turbos represent? Turbo represents a 16, right? Setting. The standard is the 34 setting. So it's when the 34 setting, which is the histogram, the colored histogram, goes below the 200. That generates the white star, okay? And I don't have a label here, 200 extreme. I could put it there, but again, it's just another label that, you know, it can get cluttered up. But that's the reason, John. All right, that's where you're getting the signal. Now let me just finalize what those signals are actually showing, what's happening here. Most oscillator signals generate when price comes down below a level and then comes back up. So the signal that's generated is on the hook back up or down. Okay, so you'll see many times, if you're looking at an oscillator signal out there, if it's an automated one or whatever, most of those signals occur when it hooks back up. I don't do that. What I do is, if you notice this star, okay, is actually being generated where? When the line is coming down through the 200 extreme. That's when the signal is being generated on the real time. Not only that is if you have the audio on, okay, to that, you'll also hear that the signal as it's crossing down through the line. Yeah, it's to give it some lead time, because once it's in this configuration, it's going to hook back up. What's the saying? Hook or by crook? It's going to hook. Guaranteed. And that's something I'll guarantee. It was going to hook. Okay? So what happens though, if you wait for the hook to get actually signaled, and then your brain has to process that signal. There's lag time, not lead time. There's lag time. That's what I've learned over the years. There's lag time. So by the time you get that signal, now in this case, it's not necessarily a factor, because the price did stay in this area for a little bit after the signal. But in many cases, you'll see that prices, the oscillator will come down and then it signals on the way back up. And then when you start looking at price, the price is already kind of ripped higher. And you look and you say, oh shit, I missed that entry. Okay, particularly on turbos, let's just say, right? That happens quite a bit. On the standard one, you generally have a little bit more time because it's a deeper pullback. A lot of times these 200 extremes also happen underneath the 89, right? So notice the price came down below the 89 and then hooked back up above the 89 in terms of price, right? So the oscillator is kind of giving you that signal, but in a more statistical, generated fashion, right? So the idea is, when you start seeing these signals, right, on the way down, anticipate that it's going to hook back up. Guaranteed. I'm telling you, it's guaranteed it's going to happen, right? Now, again, it becomes faster on the turbos, right? So here, Look at this one on the most recent turbo. Right? See that signal right there? Look at that signal right there. Okay? Notice where the signal is, the star. It's on the left-hand side. In other words, it's going down through the discount line, right? And again, it's just being represented on the chart on the bar to what's happening in the oscillator. Because most of the time we're going to be looking where? At price. We're not looking at the oscillator in most cases. So what I've done is I've created this signal on the oscillator to be able to print exactly right on the chart in real time. So if you're looking at the chart and you're seeing a star, discount star, turbo, right, or the white star, that means it's an extreme. It's happening on the way down. Okay, so as John South here, right, telling us it's giving us a little bit of lead time, and that's how I designed it, right, to give me lead time. So if I'm seeing this, right, then I can either, market order, I can either do buy stop, right? I can prepare for what? That hook. That's what it's all about. So I've missed out on countless signals because of that. Came in too late. So what was my solution? Give me the early signal before it hooks. These are the subtleties. If you don't know them, if you haven't, you should come across them in the videos. But if you didn't, if you skip, if you just pass by, these are the subtleties with the tools that I created that again, to me, they're priceless. You know, I mean, this already statistically, these discounts, right? Look at it's telling me that the price has gone pulled back, statistically speaking, right? Enough where it's, kind of you stretch that rubber band, it's stretched. It's going to snap back or it's going to break. One of two things, right? But in this configuration here with the EMAs and the directional push, it's unlikely it's going to break. This is where you got to kind of get to in your head, right? It's unlikely that's going to break. So you want to go with it. You don't want to, oh, I don't want to buy that. I do want to buy that. And so having that signal and understanding where that signal is being generated and why it's being generated as it is should hopefully help you, give you some more, again, a greater level of confidence to um, understand what's happening there. Just a little knowledge about that for the next time and the next time after that and many times beyond that. Guess what's going to happen? You tell me. All right. All right, cool. All right, obviously we got early consolidation followed by continuation. So let me just make that note for the recaps. All right, so just making some notes for the recap, so it picks it up and what we're talking about. This is probably note today, by the way. This is probably a very good textbook. Cycle day 2 consolidation followed by a breakout with good solid signals to take. Remember, if you're not a range trader, as we were discussing earlier, and your lean, your favorite lean is to, get on board when breakouts, first pullbacks, even the first pullback by here. We were talking about the stacker, but and again, that's certainly good, but this still is the first pullback. So did you miss anything by not getting the stacker? No, but our discussion about the stacker is giving you an alternate, a way of starting on getting on board and then building into a more significant position if the market is directionally going to continue. That's the kind of the idea. This is the mentality, this is the kind of the thought process that you want to get your head around, okay? About how do I get aligned? What are some of the ways and techniques I can get aligned? What are the tools that I have in our toolbox here that I can that helps me get aligned? Don't worry about whether I'm going to lose $100 or $200 or whatever. Just again, keep that shit out of your head, right? But how do I get aligned? You know, and again, you don't have to be all in. I'm never all in. I'm progressively in. All right. Because if I'm all in, then I have no out. And if I get stopped out, boom, I'm knocked out. Right. But if I get progressively in, a little bit here, a little bit there, whatever, I'm building into a position, I can get as aggressive as I want at any moment. But I'm also managing the downside if it doesn't work. That's always been my approach. And yeah, could I have made a few extra points here and there? Yeah, but big F and D, right? Doesn't matter because I got to manage the downside versus the upside. But once it starts moving in our favor, as it did here, I mean, you could just jump right on it and build, build that position, get to your full stack position very quickly. But that's kind of the thought process and mentality, right? If you know you're not that, versed and experienced in range, well, I like to, again, one of the ways, well, when it finally breaks out of the range, I can recognize that that's a skill set that you have, a competency that you have. I'm going to jump on that when that happens. So, as I mentioned even earlier this morning, so you gotta wait for your trade, whatever that is. Your trade is not somebody else's trade in the community. Your trade is your trade. Your trade is not my trade. We should all have similar style trades and techniques and tools that we're using, certainly, but your trade is your trade, whatever that is, right? So kind of think of it, from that angle, right? This is your business, what you're looking for, but we are looking for similar things across the whole community, you know? I mean, that's why we're here together, isn't it? We're all speaking the same language. All right, questions, comments? Good work so far. All right, great. I know many of you already know a lot of this stuff, but I think uh, I don't want to be, for the sake of being a broken record, saying things over and over again. But I guess everybody has said to me from one time or another, keep repeating, keep repeating. What's the significance of the overnight midpoint that you showed yesterday? So I showed that on one of the other screens here, right? Yeah, so let's take a look at that. Let me pull that up here. Okay. Okay, so hold on a second. Okay, so yeah, so this is what I was talking about yesterday. What Oris is asking me. All right, see, is this hold on a sec. So basically, the significance of an overnight midpoint or overnight uh, session. Let me see which. The midpoint of a session, they're markers. Okay. So again, if you just recall the overall concept of how I'll put it on the side here a little bit. In other words, the midpoint from 8 to 9:30. Yeah, yeah, yeah. The overnight. So I understand. So if you take the general concept, if you accept the concept is our compass, okay? Our compass is what? Right? A high, low, and a midpoint. Okay, so that's our compass, just like north, south, east, west. So for trading, it's high, low, midpoint. Okay, so we take any range. So this was the 1800 to whatever 930, call it, that you were mentioning, right? So, when 930 open and we get kind of a move back up, okay, the midpoint, right, is typically going to act, so since it's the 50% point, it's going to generally act as an initial stopping point for a move, a barrier. Doesn't necessarily have to be the final stopping point, but generally it's going to be a stopping point. So that's kind of what we're always looking at. We're always looking at, whether it's the overnight midpoint, high low midpoint, or RTH session midpoint. All right, there's usually going to be, um, yeah. So this is where I'm talking about. I was just trying to find it here. Okay, so because we got multiple sessions. So this is the US session from yesterday. So we saw that move up, okay? And over here, all right, it says FS, means full session midpoint. So the full session includes the overnight. Okay, so what was happening here is we had that auction, we had the auction push up to the midpoint of the overnight session. So that's when I used overnight. I think I also referenced the term FS for full session. It's the same thing. All right. So we got a little bit of an overshoot, right? And then a failed auction up here. All right. And then the reversal, back down into the range. All right. So that's really the kind of the core of it, Orist, is that we're looking for reference points at all times. Right? What could be some of the key reference points? So for instance, here at the moment, right, this is today's RTH session on the profile, right? So this is today's session, okay? Um, obviously look at the breakout, right, that happened here from this edge of yesterday's overnight, right? We got a breakout, okay? And then look kind of where this is stopping, all right? This is a high volume node over here, right? 95-ish. If you look over here to the left, this is a value area low. Okay, so these are some of the areas and levels that the market is seeking to test. Now, what I like about this is Smash Lido, right? I think it's .com. If and I know you have Sierra Chart, right? So for those that have Sierra Chart, go to smashlido.com. Again, if you want, I don't get anything for any of this stuff. You see, I use his profiles that he's created. They're fantastic. Okay. I at this point I can't, I would never trade without them. All right. Um, but what they do, what he has done is he labels all these key, okay, you did buy this profile. Okay, super. So you see what I'm getting at, right? So you see that, all the labels that he puts on here are fantastic. Okay. This is kind of, it makes my life easier, certainly. And it would make your life easier for anybody that has Sierra chart and wants to utilize this. Um, I put this particular profile on a vertical screen, okay, on a vertical screen. So like a portrait, not a landscape. Put it on a portrait screen. If you can put your monitor on a portrait, if you can turn it where you put it on a portrait, the profiles, they light up. They look really, because you can see the whole broad spectrum of a profile move, okay, on a vertical. On a landscape like this, you got to compress it, and it just doesn't look as good. Um, but see, so that's basically the core reason, right? We're always looking at high, low, midpoint. That is our compass when it comes to trading. At least my compass, right? Hopefully everybody's here. All right. And then, of course, when we do that, well, yeah, let me just do this again. So high, low, mid, right? And then what else do I do? I do the quartiles, right? 75, 25, right? Or 25, 75. All right. So quartiles. So I break the range up into quarters. And then if price is above the midpoint, okay, we're bullish. This is how I classify it. We're bullish. If price is above the 75 from the low or 25 off the high, I call that strong bull. Okay, and then of course above that is expansion bull. Expansion bull, right? So I can kind of classify where price is relative. Think about this in another way is, you're in the blimp over a football field, right? There's a 50-yard line, 25-yard line, goal line. Where's the ball on the field, right? You're the blue team or the green team versus the red team. Where's the ball? Are you driving to this goal? Or are you driving to that goal? Where are you in the field? Okay, so you can kind of think about it that way as well. All right, so hopefully that helps in terms of explanation. Again, just references, right? All these things become just really core references, and they can be very helpful on determining what type of, uh, who's gaining control. Not only are they gaining control, are they maintaining control? Okay. Um, it's go to smashlido.com. Hold on. Is it Smashlido? Hold on. Oh, Smashlido maybe. Oh yeah, here we go. Here we go. I had the wrong address in. Go to smashlido.com and then just search that. All right. Again, chart books for Sierra chart. All right. Check what he has out on there. All right. He just focuses, I believe, just on the ES, but you can convert it to YM, Barbara, if you're using YM as you are. You can convert it to YM. You can convert it to crude oil. All right. You can convert all of that. Thank you, John. There it is. Yep. Perfect. Smashing charts. There we go. Very reasonable for the work that he does on those things. It's just phenomenal. I mean, I could never do that type of work. Put those together. Not in a zillion years. So that's why I use it. And I'm a big believer if I'm using something that's very helpful that I cannot create, I'm sending it to where, purchase it from them. I get zero from it, but you will get, I think, an enormous benefit. Yeah, you buy the profile. The T you can just the TPO. No. Let's see. Oh, you know what I did? I bought the entire bundle. Okay. Yeah, ES chart bundle plus bonus chart. I bought the entire bundle. Do you need the entire bundle? No. If you don't want the entire bundle, all right, because it has Renko, it has other things to it. All right, just get the ES market profile, TPO, okay, for 79 bucks. I ended up getting everything, but that's just me, right? And if like the footprint chart, 79 bucks. Again, if you're not if you don't use the footprint chart, right? If you're not going to utilize it, don't spend the money. If you don't care about Renko charts, don't spend the money. All right, the depth of market, don't spend the money. Just spend, buy what is what you want to see. If you feel as though that, well, I may grow into learning more about the footprint chart. Okay, later on you can purchase it, as an add-on. And that's what I do when I sell my products here. Yes, we have the bundle. We have the entire toolbox. Do you need to buy the entire toolbox? No. Is it great if you do? From me, from a business standpoint, yeah, I love it. But everybody knows that I don't push that way. What is it that you want? Right? Nicholas, right? Nicholas just recently bought some pieces of our software, right? He's only wanted to buy what he is currently using at his stage of his development. But he also knows that as he develops more, that there's availability to add on, and make his it's more comprehensive, right? But you don't want to be so overwhelmed in the beginning that you know, yeah. So you grow into it. So that's how my view has always been. Start off with one piece. You want to add something additional, add in something additional. As you're growing, as your performance is there, you know. What's the saying? Commensurate with experience. But you can see like on the, we're up to the weekly VWAP, okay, on his chart, the weekly VWAP at 74.92.95 area. So is it a surprise, or should you be surprised that the market kind of stalled there a little bit? Well, maybe you would be, because if you didn't know what that area was all about, right? That's a weekly VWAP. Yes, it can exceed the weekly VWAP, but that's a weekly VWAP, right? Volume weighted average price. So, oh, and there's also a monthly VWAP nearby. So monthly and weekly. Do you think that's a significant area? Do you think that would be a significant area? All right. So yes, everybody has levels and so forth, and this is just, again, this is one of my primary things that I look at. But with all that, having that, trying to understand, levels and, again, potential reasons as to why, prices would stop in a particular area or reverse in a particular area and all that. Again, it's all contextual, right? It's all part of the process. But ultimately, at the end of the day, right, that's all great for having the broader understanding of what the big, since we're kind of following the elephants, right, the big boys, we need to know kind of what they're looking at. What are some of the key levels and zones they're paying attention to? And that's what these areas are. But with all that, we still have to execute for ourselves in the context of that. So on a breakout today of the overnight high at 65.70 zone, so you'd say, well, on a breakout of that, where could it go? What would be potential targets if the market broke above the overnight high, which was what, 67? So that's the question that you ask. If price today during RTH breaks out above the overnight high, where is the potential for the market to go? What would be some reference areas that we could cite? Previous mid, full session mid, 82s. Okay. We got monthly VWAP 85. So 82, 85s or 80s to 85s if you want to use like, 5-point range. Where else? 90, 95s. What does that represent? Oh, the weekly VWAP. Not only that, a prior value low that we already cited. You see how I'm getting these targets? This is not random. Prior known highs, right? Which was at 91, yesterday's high. Prior known highs. Then you start throwing in, you know, beyond, various highs. That was an RTH high, right? Regular trading hours high. Then you do, well, maybe a D-level money box from yesterday's wide range RTH. Do a D-level money box from that, right? Again, you see how you kind of layering in. You can not only use Smash Lido's levels like this, which again I'm referencing quite often, but I'm asking questions. What would be targets if there's a breakout of today's overnight high? Okay, so you can cite those in advance before it ever happens. Then you have that, and you have that kind of in your head, or maybe you wrote something down on a note, on a pad, whatever. And now you see in real time the market starting to break above the range and starting to break out. You've already thought about, well, what happens, what would be a target if the market does break out above the range or above the overnight high? Where could it possibly go? Possibly go. Where's the potential? There it is. And again, doesn't mean it has to go there, but you have something in mind where there's a goal in mind that the potential that the market can go to, can achieve. Now, what do you see up at this area? Well, the market pushed up here. Is it being accepted or rejected? We talked about acceptance and rejection the other day. Is it being accepted or rejected? These prices. Are they being rejected, or is price staying up here? Collectively, not just on one bar or one 5-minute bar, but collectively over some time. Yeah, so it's staying up here. So because the market pushed higher and then now it's consolidating higher, it's accepting these levels at this moment in time, right? I don't know in 2 hours, but at moment in time, is accepting these levels. Market is trading back and forth, right? The buyers pushed it up here, right? There's two-sided trade, but it's staying here. So that's acceptance over a period of time so far, and volume. So time and volume. So this is acceptance. So what does acceptance then suggest? Well, buyers are in control. They're holding it up here. They're buying whatever selling that's developing. They're absorbing those sellers. What would be the next expectation? Perhaps a push higher once the supply has been exhausted. So since this area is being accepted, I certainly want to be playing longs on pullbacks, perhaps into the 80s, 85 zone. Does that make sense on the kind of the read through and the logic of that? If there is logic, the logical kind of thought process. That's that's what drives, that's what's driving the decision to, hey, I want to look for longs. Okay, so guess what? Now here's I'll finalize here. We get a nice 810 running there automatically, but just on the right hand side here. So if we kind of identify this pivot area, right? Notice the pivot here, and it tested it low there, and it tested it again. Okay, stackers. Am I looking for a bear stacker or a bull stacker? I don't care about bear stackers. I'm only looking for bullish type stackers. What am I looking for in terms of ATRs? Am I looking for a bearish ATR signal, or am I looking for a bullish ATR signal? Bullish. Okay? So now we're developing what leads us to those questions and so forth, right? And what we're looking for is knowing the context of what's happened. Markets pushed higher, right? And now it's consolidating higher. So it's accepting. So look at this. Here's just one pivot. It retested that, retested this again, as we just pointed out. Okay, so that's around the 80s, and that kind of corresponds to the the low volume area here, the edge. All right. So in this whole move, kind of back and forth, back and forth, back, what are we looking for in terms of taking a potential trade? Well, let's isolate. Everybody following along, Orist, everybody else, right? So let's isolate this right in here. So we got an A4 bull. Okay, so price dips below the A4, but it holds the pivot. Look what happens. RC, what's RC mean? Reclaim, right? It's reclaiming the A4. What kind of style trade is that? A PKB, peekaboo. What did it do? It peaked below. Oh, you got a star there, by the way, right? Green star, so we got a discount. And then it pivoted back up, right? So you got a pivot. So how could you play? So now the question is the how, right? How could you play this? Again, you got to be thinking this in advance. I know we're reviewing it post. You got to be thinking about it in advance, right? So if price gets less than, you know, A4 or discount, then reclaims, right? Whatever. A4 equals what? Buy. So I'm writing a little shorthand. If the price is less than the A4 and it generates a discount, I mean, you can add to this as much as you want, the statement. I'm just kind of shorthand, right? Then on a reclaim, right, reclaiming back above, AR, the ATR, on a reclaim back above, that's your buy signal. So what you want to do is write out some shorthand like this. This is kind of like a conditional computer statement. You write out a conditional statement, something similar to this. Write out an example one so you can reference an example one so that kind of helps gives you a prompt in real time. Okay? So now then you know how to at least structure and ask a question that can then lead you to an active answer or action, right? This is, by the way, the OODA loop, right, in action. Observation, orientation, and then this right here, okay, is the decision action cycle. Pretty cool, right? Am I thinking about what's happening around the world? Am I thinking about anything but what's happening right here? No, because all that BS. Well, this guy said this on Twitter. Or this guy was posting that. Who cares what they're posting? This is all that matters right here in front of you, what you're doing. I'm trying to give you the you know the techniques the thought process and the techniques to get you there, you know, okay? Not, oh, will this work if I buy it? Well, the EMAs don't really look exactly the way I want them, okay? There's all going to be variations to all that stuff. But what's the core of it? Market drove higher, market's consolidating, okay? It's being accepted. Is there an opportunity within the area of balancing here? That I can take a trade. If it goes higher, all right, then certainly I want to be involved in that. Well, then what's the how and the what? All right. This is all the type of stuff you got to think about. You don't have to think about much of, a whole of the other stuff. You got to think about this stuff. But everybody, it's like what Ram's just saying, brains want to predict rather than look into the charts and executing. Yeah, you just want to say, we want confirmation before something happens. You know, you're never going to get to know what's going to happen. You know, right? And yes, it's easier to see this stuff past tense, but we need to look at this stuff past tense, understand and formulate, well, how could I ask or how would I ask a question to lead me to an actionable response? What do I need to do to do that? And it all comes down to if, then, else, right? In the flow chart, all right, go to false, true, right? Lead you someplace else. Everybody ever see a flow chart? Okay. That's the decision process you should be utilizing in trading. I am 1000% on that. If you're thinking about anything else outside of this type of structure, you're wasting your time. And I know most of you, not all of you, most of you are discretionary or semi-discretionary traders and so forth. So you need to have a structural formula type in order to help you make a decision. Because if you don't have this type of structure, you're going to fall back on emotional decisions. You're going to get fear, apprehension, hesitation. All that's going to be jumping right in front of you, leapfrogging in front of you. You need to get rid of that shit out of your head. And this is why when in my videos, and I've said this over the years, you have to think like a computer, right? You got to think like an algorithm. You got to process information similarly like an algorithm. This is how you do it. I say this to you, I say it to myself. This is probably a good video recap to save. I don't know if that trade's going to work. As one of my mentors says, in a very colorful language, by the way, and I won't repeat the colors, take it and find out. Okay? Do you have a plan for it if it doesn't work? Do you have a plan for it if it works? How many at bats do you want? Do you want to just take one big swing on one trade all in? Or do you want to have multiple at bats? I'll take a base hit here, a second base there, maybe a bunt occasionally, right? but you want swings at the bat. So don't go all in. Uh, Barbara, once you get the chart book, he should send you the just the chart book, right? .cht, the chart book. Just dump it in the data folder. Yeah, just put it in the data folder. That's all you need to do. It'll show up. Yeah, just dump it in the data folder. So Barbara just bought it. Good. I think it'll be helpful. I'm on fire. I had two espressos, double espressos today. So it's kicking in. Oh, it's kicked in. Yeah, hopefully the recordings have been very helpful here, Okay? I mean, there's a lot of good stuff in this that that I've repeated over the years, but again, many of you, not haven't been with me over the years, so all right. All right, I'm going to then stop the recording here today. Um, let's see. Yeah, give us a thumbs up if you like it. I like thumbs up. Um, digital targets. You know, I haven't, John. I actually, I was asking Jeff about the mini yesterday when we were discussing it. I have the. I'll tell you what I have. He just sent me the. He just sent me the specs. I have the Stratosphere Pro Z8. That's what I have. Stratosphere Pro Z8. Um, I didn't ask him about the Mini because he already kind of knows what my specs are on my other computer that I have that I'm running on now. So what I was thinking originally was, okay, I'm just gonna, I was looking at the Mini. It'll fit on my desktop behind my screens here, right? And I said, okay, maybe I'll just get the Mini as a backup. And you know what he told me? He says, well, your computer right now is about 3.5, 4 years old. He says the expected uh, age is about 5 to 6 years before replacement. Now, most of my computers have gone past 10 years, but in terms of technology and all that stuff, right? So I asked him about, I said, well, I'm just looking to get kind of a backup because my backup, you know, went the way. So he said to me, he says, well, the one you should, given your specs that you've had over the years, you should probably get something similar. He says, and in all fairness, he says the one that you're going to get today should probably be your main computer, and the one that you have there should become your backup because you'll have the most recent technology, speed, performance, power, you name it. And he says, the one that you have, maybe that make that create that as your backup, you know. So so I was thinking about the mini, kind of like, just I don't need a whole lot, I just something to back up my current system. So as it turned out, I ended up taking his recommendation. As I mentioned to everybody earlier today, I said I don't really skimp, but I was kind of thinking about skimping, like I don't want to pay, you know, $3,000, $4,000 on a computer. It's like, I could use that money someplace else, but I have to. I mean, I gotta, and so check. Here's the thing, John. Call him up. Call Jeff up. All right, he'll more likely answer the phone. Call him up. Uh, you can use my name. Polaris. Um, I bought 4 systems from him. This is the fourth, and you know, they ship worldwide. So if something that you need and whatever your specs are, whatever you need, whatever's going to fit for you. See, again, I'm running, business here, so I need backup. If I was not running the business like I am, I would not have 2 computers. I have one computer, and if it crapped out, so be it. Then I'll get one. I don't need a second one if I'm just trading on my own type of thing, right? But because I'm running the business and everything, I can't have downtime like that. If something happens to this computer, I need to at least have, you know, a level of backup. Oh, uh, the remote support is I can't speak highly enough about it. One of the support techs, Andrew, there, is fabulous. Another guy, John, right? They remote via TeamViewer, just as I do. They remote via TeamViewer, and I have a quick link, quick TeamViewer. If they need me, and I just send them, I just click on that link, and boom, they're on my computer. And you talk to them while he's on your computer. So fantastic. Yeah, the language barrier can be challenging, of course. Yeah, they're in Georgia here, so yeah. So talk to Jeff, see what if whatever specs that you need, he'll build it to your specs. He's they're not there to sell you the most expensive. They're there just like my attitude. They're there to sell you, build you what you need. And if you can, shave some price somewhere where if you don't need something, if it's not mission critical, then he'll build it. But I was looking at the mini when I first thought about this. But I'm end up getting the floor, the tower, similar to what I have. So, anyways, Bobber, on a zip file, if it's on your desktop, just double click on it. It'll open up the folder. It'll open up the zip file, and then the chart book should be within that folder. Within that folder, okay. Extract that chart book from the folder onto your desktop, and then put that file, CHT file, chart book file, into the data folder. That's how you have to do it. Any compressed zip file, all right, just double click on it. It'll open up another file folder, right? Within that folder, you can actually put that folder on your desktop, and then double click on that folder, and then the file should be within that folder. Put that on your desktop, and then throw it into the data folder. That's how that works. All right. If you need help on that, I won't be available till tomorrow sometime. So if you want to hold off on it, if it's not critical right now. All right, we'll do that. Check out tomorrow sometime. All right, everybody, I'm gonna shut the stream off at this point. Again, thank you for your interaction. Uh, Hopefully, it's been educational and profitable as well. All right, probably getting into a little bit of just quiet time at the moment. Up here at these areas, still, again, balancing out at these higher points in time, but you don't have that. You're not getting that drive that we had, right? That breakout drive. So you get a drive and then a consolidation period, right? Then maybe we'll get another drive higher later on. We'll see, right? So just be aware of that. But drive and now we're consolidating, right? Could it reverse, back down? Sure, that's all kind of scenarios that can unfold. But right now, as we're signing off here at about noon, um, I don't see that unfolding. And again, one last thing, just to reiterate, if you want to check out what Danielle has going on for the mindset stuff, okay, she should be coming on in the pit room, free access at noon. So check that out. She should be, as far as I understand, still ready to go there. Okay. In terms of the pit room, one final thing about the pit room. You notice I'm not in the pit room today. It's Wednesday. That was my slotted time. Okay. And I have um, pulled back from that. I am working with Danny Riley, right, and Marlon and others on this, on kind of re-getting involved in that. All right. And it's only going to be if I can simulcast, all right, if I'm the primary simulcaster. Okay. Going back and forth, with Manny. Manny does an excellent job. He trades very well. So for those of you that are been watching Manny, and following his stuff that he does over there on a daily basis, you see what he does. He does a very, very good job, right? And he's very profitable in the trades that he takes and so forth. Okay, different, little bit different style naturally than we are here, but that's what makes the world go round, right? But having two folks kind of that way, there was conflicts going on. Just wasn't working. Technology wise, I couldn't simulcast, as cleanly and so forth, and it was just, wasn't not going to work. So I've pulled myself away from that for the time being, right, to focus on what we do here 100%. And if it works out, it will only be work, and again, I still may have a Wednesday slot, but it's only going to be under the basis that I'm the primary simulcaster, because I can talk to both rooms at the same time. Marlon has set us up on the technology here to be able to do that easily. That was all part of the big upgrade in the platform here. But you can't have two people talking different languages. You know, we're talking what we're talking in our method, and others talking about other stuff. It just doesn't work. It's you know, I don't speak Thai. I speak English, so it's like me speaking with a Thailander, you know, you're speaking Thai, yeah, they're speaking Thai and I'm speaking English. It's not going to work, you know, unless we all understand Thai and we all understand English. So it doesn't work. All right, so I will let everybody know when it comes to what that's all about. All right, so have good rest of your day. We'll see you back tomorrow. And again, getting into the lunchtime period, so probably things are gonna slow down a bit. So take a break. And again, appreciate all the questions and so forth. Um, every day, if you have some questions, don't be bashful to ask. If it's slow and I can, we can jump on it, then we will. All right. Sounds good. All right. Have a good evening. Good evening. Have a good rest of your day. I got a couple meetings scheduled here around noontime, and I'll check in probably kind of mid-afternoon. All right. Also. Oh, is he? Oh, I didn't know that. Ah, okay. All right. All right. Have a good rest of your day, everybody. Thank you.